What's up everybody? Welcome to the Stocks channel. My name is Cory, and in today's video we're going to do macro level analysis on the S&P 500, NASDAQ 100, the Dow Jones, the Russell 2000, and we'll also look at Bitcoin. First up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, first up is the SPX, and we're looking at weekly chart, so each candlestick does represent one entire week's worth of price action. Now we can see for the week here, if we zoom in, we really didn't go absolutely anywhere for this week. We pretty much closed where we opened, and that does show a little bit of uncertainty in the market. Now, if we're looking at price action, we can still see price action closing over top of the 5 EMA, and we still have the very strong bull trend, so the price action and the trend are still bullish even on this macro level view. Now, don't forget our price target is up here at 43.06, and from this week's close to our price target is about 3% upside to that price target. If we go from the close to the 20 simple moving average, that's about a 6.4% drop. So do note that our risk is defined by a 3% upside and a possible 6.4% downside. Remember, we're going to use our daily analysis to figure out when the market rolls over, and we have yet to see that. Right now, the market is still bullish on all charts, but obviously things are subject to change as we get closer to these price targets. So right now, the trend and the price target on the weekly chart still look very strong, and it does imply that we should be seeing that price target at 43.06 in the very near future. Now on the SPX, let's jump over to the monthly chart and see exactly what happened for the month of April. We did see a very bullish month of April for the SPX, and we did close over top of the Bollinger Band. The upper Bollinger Band was at 41.19 on the SPX, and we did close at 41.81. So we did close the month of April above the upper Bollinger Band, which is a very bullish sign. So it really wasn't that surprising to see a little bit of weakness into the end of the month because we were getting a little overextended on the Bollinger Bands. Now the good news is in the month of May, which we're now going to start as soon as tomorrow, these monthly Bollinger Bands will expand, and it will give us very close to our price target at 43.06. So you can see the price action and the trend on the monthly chart are also very strong, and we still don't have any reason to believe that we're going to see massive selling until we get to this price target. Remember that these price targets act as triggers, and they will invite sellers into this market. There's going to be a mixture of profit taking, and there's going to be a mixture of people leaving the market because they think there's too much risk to the downside, and they're going to want to wait to buy back at lower prices. So as we get into the 4200s and the 4300s on the SPX, it does mean that we're getting into a more risky market. Remember, the higher we go, you want to take out risk and you want to deleverage your trading. You don't want to get over leveraged and over aggressive as the market continues to go higher. You want to take those profits and get ready to buy the next dip. So from our price target at 43.06 down to our support trend lines, that's a drop of anywhere between 13 and about 16%. So there's definitely a lot of downside risk after we get to these targets. Remember, there's no guarantee that we have to see a massive stock market correction after we get to 43.06. We could continue to go higher, and that's why we need to treat the market one day at a time and don't make any assumptions. But do note, for a possible 3% upside, we do have increasing risk to the downside. So don't get overly greedy and don't get overly risky as the market continues to go higher. Let's also check in on the bear bull survey, and we can see this week we did get a reduction in the bulls, which is actually a bullish indication. Remember, this survey is a contrarian indicator, and we don't want to go with the masses. If we see too many bulls, we want to get more defensive, and if we see too many bears, we want to get greedy. Right now, we're seeing a reduction in bulls as we continue to go higher, which is a good sign. We're seeing more people go to neutral and more people go to bearish, which means there could be more cash on the sidelines and there could be more people trying to short this market. Cash on the sidelines and people trying to short a bull market are both catalysts for a possible blow off top scenario. Remember, in a blow off top, there's a huge parabolic move near the end of the cycle, and that's what triggers the major stock market correction. So right now, note on the SPX that our price target is 43.06, but that's without a blow off top. We could still get a blow off top, and that's why I never suggest trying to call a top or trying to short a bull market. On the daily analysis, we'll more than likely see the trend rotate and roll over, and then we will possibly be able to short this market. But right now, the trend and the price action are too strong to be bearish, and they're too strong to try to short. All right, next up, let's take a look at the NDX weekly chart, and we can see the NDX price target is up here at 14,488. From last week's close to that price target, we do have upside of about 4.5%. From the close to the 20 simple moving average, we have about a 4.5% drop. So in the NDX, we don't look quite as overextended as we do on the SPX. We have about 4.5% upside to major resistance and about 4.5% downside to a major support level. We can see the price action close over top of the 5 EMA, and on the weekly chart for the NDX, we're still in a very strong bull trend. We're well within the Bollinger Bands, and we're not too far extended on the weekly chart. So let's jump over to the NDX on a monthly chart, and we could still see the upper Bollinger Bands are still well within our price target. So the NDX does look like it's going to continue to climb higher, and that does make sense because some of those FANG stocks still look like they have another leg higher to go before they reach a critical resistance level. So will the NDX possibly carry the SPX higher than 4,300? That's to be determined, but right now the NDX does look like it has more upside than the SPX. The SPX has about 3% upside to its price target, and the NDX has about 4.5% upside until it gets to its price target. Also note that we did have very strong earnings in the big blue chip tech names that do drive the NASDAQ 100. So on the monthly chart, we don't look too far extended, and we will see these Bollinger Bands continue to expand going into the month of May. So the stock market looks very well set up for a very bullish month of May, but we need to play it one day at a time, and we need to remain flexible in case we see this market reach a critical top and start rolling over. Next up is the Dow Jones weekly chart, and we see the Dow Jones also closing the week over top of the 5 EMA on the weekly chart and still holding up on the strong bull trend. We're well within the Bollinger Bands, and the trend still looks very healthy and very bullish. On the monthly chart for the Dow Jones, we can see that we were getting a little far extended in the month of April, and we were above the upper Bollinger Bands. We saw that in the month of March, and we did see an expansion of the Bollinger Bands going into April and the continuation of the bullish price action. So there's no reason to believe the month of May will be any different until we see something shifting. We will get an expansion of these Bollinger Bands, and the Dow Jones will continue to be able to push higher. The price action still looks very bullish, trading well above the 5 EMA, and you can see the trend is still very strongly bullish and very positively sloping. So while the Dow Jones is getting a little overextended, that doesn't guarantee that the bull run is over just yet. We need to wait for a confirmation of a trend reversal before we get bearish on a bull market. On the Russell 2000, we had another flat week, and we continue to consolidate and go sideways. It's very apparent on this weekly chart. Remember, the Russell 2000 did get too far overextended, and now it's in a consolidation, and instead of correcting through price, it's been correcting through time. Remember that a correction through price is when the stock market goes like this and finds critical support and then bounces. A correction through time is when the stock market bounces around and consolidates and sort of gets into a wedging consolidation pattern before it starts heading higher yet again. So right now we can easily see that the Russell 2000 is correcting through time instead of through price, and that is a bullish indication, which makes it very difficult to try to short a market. If you're a bear trying to short the market and the market is going sideways and you're trying to short by buying put options, you're still going to lose a lot of money to theta decay. So remember, shorting a bull market is never easy, and there's always the possibility that we see something like this where the market corrects through time. We could still see the price action over top of the 5 EMA and a very strong bull trend on the weekly chart. Jumping over to the monthly chart on the Russell, we still see that we're within the upper Bollinger Band. These bands will expand next month, and the Russell 2000 can continue to try to push higher. The price action and the trend on the weekly and monthly chart for the Russell 2000 are still very strongly bullish. Remember, we got overextended on the Russell in the month of March, and April was really just a consolidation and a correction for the Russell, and we could see a continuation of that bull trend at any point. Jumping over to the VIX weekly chart, we can also see the VIX is starting to bounce off of the lows, and we did close the week over top of resistance at 18.2. The biggest thing to note on the VIX is that we need to watch the VIX to see if it's going to get back into the 20s. If the VIX gets back into the 20s, that will increase the probability that we're likely going to see a deeper stock market correction and a higher likelihood that we would see a correction through price instead of a correction through time. So watch the VIX, because if it does spike going into these next few weeks and it gets into the 20s or higher, that will be an indication of a deeper sell-off. Jumping over to Bitcoin's weekly chart, we can see Bitcoin is back on the bull after bouncing off support right around $48,000. It's back over the 5 EMA, and it's still holding on to the weekly bull trend. Bitcoin's back over about 55,000, which was that critical resistance level, and it does look like Bitcoin could be trying to make all-time highs in the very near future. We will have upside resistance on Bitcoin right around 61,000, but a break above that level could bring Bitcoin to 67,000 or about 75,000. Jumping over to the monthly chart on Bitcoin, you could see exactly why Bitcoin had to go through a correction. It was way outside the upper Bollinger Band in the month of April, and it needed to cool down. That's exactly what we got in the month of April. We got a cool down, and we continue to see Bitcoin looking like it's cooling off even in the beginning early stages of May. You can see Bitcoin's already at the upper Bollinger Band, so just the slightest bullish price action getting into the 60,000s, it will already be overextended yet again. That doesn't mean Bitcoin can't continue to push higher and stay riding along the upper Bollinger Band, but it does mean that Bitcoin is going to struggle to get those parabolic moves to the upside without a significant downward pressure of selling and profit taking from a lot of Bitcoin bulls that bought way back down here when Bitcoin was only about $9,000 or lower. So remember, all of the bulls that are selling Bitcoin way up here are just profit taking, and the more extended Bitcoin gets, the harder it's going to be for Bitcoin to continue to go higher. You can also see a drop in volume on Bitcoin, and it's just not enough buyers out there to help Bitcoin go through those parabolic pushes higher that we saw in the previous month. So do note that Bitcoin is still overextended, but it does look like on the weekly chart that it could try to make another push back into the 70,000. So the critical levels on Bitcoin are going to be watched to make sure that it can stay above about 55,000. That's the critical support level, and the breakout level will be a close of about 61,000. So going back to the SPX, you can see the SPX did get a little too far extended on this monthly chart for the month of April, but that is likely going to change in the month of May when these Bollinger Bands expand. So we still have a lot of earnings to get through, and the market is still looking very bullish. On our daily analysis, we can see that we did close above critical support last week. Even though it was a very flat week, we did get a nice consolidation and a building up of energy, and that energy is going to release very soon to the upside or the downside. We don't want to make any assumptions about the direction that the energy is going to be released in, but we do know that the market was consolidating and it's getting ready for a big move. If you're new to my channel, I do daily stock market technical analysis right here on the stocks channel, and I also have a Discord server where I do daily analysis intraday and always help you stay on the right side of the market. I also bring new trade ideas to you weekly to help you absolutely crush this market. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description of the video. So just remember, as the market continues to go higher, deleverage yourself and don't take on too much risk, because it is getting to the point where we have more downside risk than we do have upside potential. We don't want to try to call a top, and the market is still bullish, but it's never a bad idea to get more defensive the higher the market goes. So thanks for watching, everybody. I hope you're all enjoying your weekend, and as always, I will see you in the next episode.